Hi guys, this is Mark Shawson, the Pattern Trader. As you can see on my screen in the background, I've got the Wimbledon Championships on. This is my favorite time of the tennis season. This is the only major grass court tournament that they hold. And tomorrow will be the 10-year anniversary of the seminal match between Roger Federer and Rafael Nadal, where it went 5 sets in 2009, generally regarded by tennis historians as one of the greatest matches ever. And tomorrow we'll have the matchup again of these two legends who are, 20 years later, still dominating the game of tennis in what was thought to be a young man's sport. Next month, Roger Federer will be 38 years old. Rafael Nadal is 33 years old, and they're still dominating their sport. So I think that there's a lot we can learn from these two legends, even if you're not a tennis fan. The fact of their longevity, their commitment, their discipline, and the way they go about their business, we can extract a lot in our job as traders to try and exact the same discipline. And really what I'm getting at is for the last couple of weeks, I've been talking about how I feel the summer season is perhaps the most difficult season to trade the FX markets. That's not to say there aren't any trading opportunities. You've just got to be extraordinarily disciplined about the way you go about your business, because you're apt to get these huge moves and then snapbacks. They look like they're breaking out. They break right back in the range. And yesterday we saw some of that activity where the dollar went to its multi-year resistance highs, and then immediately was sent backwards from that. Yesterday, the U.S. Federal Reserve, Jerome Powell, said that he was likely to reduce interest rates at the end of July, and on the heels of that, the dollar weakened. So the real question is, are we seeing the beginning of a significant dollar reversal, a dollar weakening, or is this just consistent with the back and forth activity that we're likely to see possibly through September? And the jury's a little bit out on that. There is a dollar correlated pair that I'll talk about on the charts in just a moment that I have been dead certain about, that I've been right on. The pair, of course, that I'm talking about is dollar versus Japanese yen. Based on long-term historical chart patterns, to me, this was pointing in a direction lower. I jumped on that trade in late March, late April at the 112 area. It's now trading about 108, 400 pips lower, and I think there's still a lot of room on the downside. So I do think that the dollar has put in some interim highs probably for the remainder of the summer. Whether we get a major thrust off these lows in Australian dollar and euro is yet to be seen. It's still a question mark in my mind. And to my mind, we're just likely to get very range-bound trading behavior. I'm going to go to the charts in just a moment, show you exactly what I'm talking about regarding the dollar, regarding dollar yen. But before I leave you guys, I just want to read a quick email that I got today by Andy. Andy was kind enough to send me an email, and basically Andy had this to say. He says, "Hey Mark, good call on the gold trade. My order was triggered and I went straight into profit, 1,050 pounds in just a matter of seconds. Keep up the good work, my friend. Best regards, Andy." So Andy, thanks for that. And Andy really kind of reaffirms my thoughts, my methodology, how I implement and execute my trades. To my mind, trading should be effortless. I'm not looking at sitting in front of a chart, 15-minute chart, looking at some kind of moving average crossover, well into midnight until my eyes are bleeding and my eyes are crossing just because of staring at the screen for so long. I basically make an assessment based on the daily and weekly patterns. I set my trade so that the market is going to confirm my trade, and then once the momentum confirms it, the trade's executed, and we should shoot immediately into profit. And that's exactly what happened to Andy, where he made 1,050 pounds in just a few seconds on gold. Gold has been firmly on my radar although I think it's going to be a difficult trade. I think it's going to be also pretty range bound, and I'll share my thoughts in just a moment. So with that said, I'm going to go with the charts, and I wish you a healthy and prosperous trading day. I'm often asked the question, do I follow the news? Do I look at events to make determinations in my trading decisions? Or do I look at price? Effectively, which comes first, the chicken or the egg? Now, yesterday, in his comments, the U.S. Federal Reserve, Jerome Powell, indicated a propensity toward cutting rates at the end of July. And in that response, the market predictably sold off, but it sold off right at a level that it's been selling off before. So always interesting how people think that the market responds to a certain set of comments, but you can see for the last 3-4 weeks, every time the dollar index hits this area, the dollar index is a measure of the US dollar against a basket of currencies. You can see that every time it hit this resistance area, it has sold off. Now, something that I've been advising our members for several weeks now is that my expectation during the July, August, even September trading season, particularly in FX, is that it gets very range bound, that it looks like it's going to break out, gets to a certain area, and then turns back into the range. So A, we have a seasonal behavior. B, we've had this resistance in the US dollar for quite some time. And so a lot of people will ascribe yesterday's behavior to comments given by Powell indicating lower rates. So the question is, where is the dollar going to head now? And again, I'm a little bit ambivalent to make a full-out prediction because we have been trading within a very defined range, and every time the dollar goes lower, it looks like it's going to breaking out to the downside, and then it finds a way to go higher, and every time it makes a thrust higher and looks like it's going to break out, it breaks back down into the range. And as I indicated, I think that this behavior could go on throughout much of July, August, and even September, this backing and filling. But it does feel like we are at a measurable resistance area in the dollar, that the dollar has put in a high for the summer. And the reason why I'm a little bit confident in that assessment is when I dig within this resistance band, so we definitely have a defined support and resistance, but when I dig within the bars, I'm looking at what I call these key reversals. Now they look small, they look benign, but to my mind it often points where the market wants to go. So you can see in this particular week the dollar index made a new high, and by the end of the week it closed on the low. And in the week following it attempted to go to new highs again and then close right on the low. So I call these mini turnarounds key reversals because they happen at a key juncture where the market broke out and made an all-time high and then close on the low. And we see this behavior in a few weeks after that where it made a new high, closed on the very low, and after that made an attempt to go to another high and close on the low. So you can see that while this week is not done, we are trading on the low of the week after the comments by Chairman Powell. And again, the markets are responding to this resistance level and perhaps also responding to the fundamental situation of lower interest rates. So when I look at these key reversals, to my mind, ultimately these bars point in the direction that the market wants to go. But you can see that in the last couple of weeks, notwithstanding these head fakes, every time the market kind of finds a way to go down, it finds support. And so I'm not ready to make an ultimate decision, although it does feel the dollar is heavy and could give rise to a move lower in the US dollar against a number of currencies. I'll go to some charts that I'm looking at now and see where the dollar is likely to head in light of a rate cut at the end of the month. This is the chart of the Australian dollar versus the US dollar. I'm looking at the chart on a weekly basis where each one of these bars represents 1 week in time.
And we can see since 2014 from a price level of 95 cents, the Australian versus the US dollar has dropped to 70 cents. So Australian dollar versus US dollar is in a major downtrend. Within the phase of this down market, we can also see this double top price pattern, which basically represented a continuation pattern, a continuation in the direction of the major trend. So once it broke this neckline here, it indicated a continuation in the current major downtrend. But at the current levels, I see some ambivalence. There's obviously major support in Australian dollar, US dollar at this 68-cent level. You can see all the way back in the 2015 time frame, we had a significant bounce off the 68 level, and now you can see that we are hugging this support area. Now, also within the support area, I look at what I call the quality of the bars. How does the bars close relative to the high and low? And you can see that in this time frame, market made a new low and then closed significantly in the opposite direction. Now we're starting to see this behavior in the recent time frame where a couple weeks ago we made a new low. By the end of the week we closed at the high. The buyers were in control. And right now, even though we have not finished the week, we've made a new low for the week, and it appears that we're closing toward the higher part of the week. But this is why the close is so important for me. This market won't close for another 36 hours or so, and so it's very important how a market closes relative to its high and low. So the school's still out as to how Australian versus US dollar is going to close by end of week Friday. But you can see that we are hugging a resistance line, and there's still a little bit of room to move on the upside for Australian dollar, US dollar, and it could still be within a downtrend. So now the question is, are these key reversals at the major 68 level bottom a major turnaround pattern, or are we just bouncing around the bottom of a significant downtrend? And the only one that can answer that is the market. So what I do is I draw my structures around the market and then see how the market reacts. Now the fact that we have these key reversals at the bottom suggests to me that there's a good deal of support in this area and that we could get a spring out of here. Whether that spring results in an ultimate turnaround, I'm still on the sidelines regarding that, and ultimately the market will be the determinant of that. What I'm really looking for is this area. We can go all the way back to this time frame where you can see the significant downtrend line, and very often markets can break beyond these downtrend lines, get us thinking that it's a breakout, and then turn back down. But if we start turning around and going higher, we can look back and see that this was a major significant area. But I'm not ready to state anything again. With my anticipation that we're going to get range-bound trading, I can well imagine that you could get this kind of activity, a bounce between, say, the 68 and 72 cent level for the next 2 or 3 months, bouncing back and forth before we ultimately see if this thing is going higher or will continue in the direction of the major trend. The pair that I'm least ambivalent about the future direction of is that of the US dollar versus the Japanese yen. This is a weekly chart, and I have been short US dollar, Japanese yen for quite some time. I'll share with you an email from April in which I sent out an alert to our members to go short a dollar versus Japanese yen, and I'm still in this trade. This is an email that was sent to thousands of our members around the world, sent on Sunday, April 21st in the weekly US dollar versus Japanese yen chart. At that time, I was indicating that the dollar versus yen was in a descending pattern called a descending wedge triangle, that it had made a recent double top price pattern, and right at the peak of the second top was this little narrow range bar. Literally, the range from high to low in that week was just 50 pips, which is a fraction of the weekly range in previous time frames. And to my mind, those narrow range bars can be a catalyst for a major turn in the market if you can understand the prior direction and patterns indicating which way this is going to break. At that time, I recommended selling dollar yen at 111.61. You can see here was my recommendation. I'll take you to the live chart now, show you exactly what I was looking at, and I am still in that trade, and it's 360 pips in my favor. As I indicated previously, by looking at the dollar index, it appears we're at a major inflection point, a major resistance area. There's some a question in my mind whether that's going to be the ultimate resistance where it rolls over or ultimately the dollar goes to the new high. But the pair that I have the least question about where it's going to go is dollar versus yen, based on its long-term historical patterns that go all the way back to 2015, 2016, where in this time frame we saw a very prominent double top. And a double top is exactly what it sounds like. It's an M top where the market shoots to a new high, backs off the high, retests the high, and once that is completed, we have this neckline. And so this M top, this double top, ultimately shows you what the future direction and path this is going to take. Now, in the cadence of the market, it can take a lot longer than we anticipate, and we can see in a recent time frame that the market has been traversing back and forth within this well-defined descending triangle where each high is lower than the last. And so we can anticipate that the movement in dollar yen is going to look something like that over the course of the next several weeks or months. So recognizing the historical patterns and then looking at my key reversal bars, narrow range bars, inside bars, I was able to successfully predict the absolute turn in this market right at this juncture on April 21st, where I advised our members to sell short dollar versus Japanese yen at a price of 111.61. We're trading in the live markets right now at 108.23. So I'm holding on gains of 340 pips, and this looks like this gain can go much larger over time. This is an extract from my trading account in which I shorted the dollar yen pursuant to that email at 111.61 in late April. Here we are almost 3 months later, and I'm still short that position, holding gains of over 360 pips with an outstanding gain of $157,000, including all my holding cost in this position. So if I detect a trend, I'm going to stay in that trend for as long as the market will have me. I'm looking for dollar yen to go back to the December support level around the 104.5. We're currently trading 300 pips or so above that, so I think there's a lot of room on the downside. So again, there's some ambivalence with summer trading, range-bound trading that I anticipate, but my expectation for dollar yen is crystal clear by virtue of the previous chart patterns, the previous history. This gives me guidance as to where this will go, and this is how I nail consistent profits, how I nail big trends in the market. If you would like to get aboard some of my trades and understand my thinking, understand my methodology, perhaps the best thing you should do is just pick up a copy of my 21 power strategies. It's absolutely free. We'll put a link attached to this this video. And with that, I hope you have a healthy and prosperous trading day, and I'll see you next time.